Tonight, the Aussie property boom may be over, with house prices now officially going backwards for the first time in 2 years. But with another steep rate rise predicted next week and the cost of living skyrocketing, will we see a real estate market slow down, or is the housing bubble finally about to burst? Australia's property market has been red hot,
2,200,000,
making it almost impossible for first home buyers to crack into the super competitive space.
sold. Congratulations.
But that's all changing. New data released today revealing price growth had either flatlined or fell across Australia in May.
I think that's attributed mostly to increased expectations for interest rates later in the year. I think there's a lot of buyers there who are a bit more reticent to bid as high as they would have, given that there's some uncertainty about how high borrowing costs will be.
The data from PropTrack finding prices are down 0.11% nationally, with a median house price of $691,000. Meantime, in the major cities, Sydney's growth is down 0.29%. Melbourne is down 0.27%. However, it's a different story in some cities and the regions, as city dwellers continue to search for sea and tree changes.
We're increasingly seeing a two-speed housing market emerge. So we saw falls in both Melbourne and Sydney driving the national result. But we continue to see solid growth outside of Melbourne and Sydney. Those parts of the country continue to benefit from those affordability trends and the trends towards larger dwellings that have been the preeminent forces that have shaped the housing market since the start of the pandemic.
CoreLogic's data released today paints a similar picture. Housing prices dropping 1% in Sydney and 0.7% in Melbourne, while Perth, Adelaide, Hobart and regional areas boomed.
Well, it's mostly a story about Sydney and Melbourne. We've been seeing this slowdown in housing markets for more than a year now, and has coincided with weaker consumer sentiments, rising fixed-term mortgage rates more than a year ago, and of course, tighter credit conditions and more cautious lenders.
But with another interest rate hike looming when the RBA meets next Tuesday, all eyes are on what comes next.
I think we'll see pretty much every market around the country continuing to slow down and probably moving into some level of negative growth towards the end of the year or coming into next year.
So with property prices pegged to plunge further, just how deep is the fall?
Well, Evan Lucas will hopefully tell us. He's the Chief Market Strategist at InvestSMART who joins us now. Evan, tell us straight, is the market just cooling or is it actually about to fall off a cliff?
I think it's probably more cooling, Georgie, in terms of where you sit. A crash would have to be pretty astronomical in terms of what would lead to that. Because the other thing that all that data that you've just alluded to shows, demand is still there. The first home owners are still very much trying to step into the market. The investor market is still relatively good. So it's a cooling market rather than a crashing market. The other thing that we're still also very much up in the air about is, as you've just talked about, interest rate rises, how hard and how high they will go. So that is the other caveat to all of this. The crash could come if the RBA goes too hard, too fast, and the ability, therefore, to service your mortgage or service your investment loan gets too high, and therefore we have to start flooding the market with more property because we can't afford to keep it.
Evan, aspiring first home buyers are jumping up and down at this news, but how long could the buyer's market last?
Yeah, it's an interesting question, Pete, and what we're actually starting to see is there is more confidence than we actually realise. So if you look at the surveys in terms of what the first homeowners believe, it's the first time they actually believe that they can get a property at the price it's advertised for. So what we've started to see is that back in the day, you'd always say the top of the range plus 10% in terms of what you're going to buy for. What you're now seeing is that the top of the range is actually probably the price, and that's where that first homeowner confidence is coming back. But they are very aware, again, of that interest rate problem.
Pete's excited. You said his question was interesting. I think you can stay.
It's a good start to the show.
Hey, Evan, what effect, if any, does this have on the rental market?
So the rental market is actually the one to watch here, and getting back to probably Pete's question about why the first timers are jumping into it. Just leading into him.
He knows where the strength is.
Yes. And the reason for it is that the rent and the cost of rent was, in the data we saw today, continuing to climb. So across the nation, rent year on year is growing at about 6.5%. In Sydney, it's absolutely running away. It's about 8.5%. In Melbourne, it's about 5.1%, and that's probably down to COVID. But if you look at places like also Brisbane and Adelaide, rent is really expanding to a point that is actually now more expensive to be renting than servicing a home loan with the median price in each of those capital cities. So that is where that attraction comes from that Pete talked about with that first homeowner stuff, is that it's actually now becoming that idea that if I can get across into my home, rather than renting, I'm actually going to get ahead twofold: cheaper pricing and costs, but also because I've got an asset that's probably going to appreciate.
Evan, really quickly before you go, why do economists call it negative growth? Why can't you just say that prices are falling instead of then negatively going up?
Because that's the technical term we love to use, isn't it? It's not, and you're right, it is literally that prices are starting to ease and that markets are going backwards. That's exactly what it is. But yeah, the technical term is negative growth.
Evan, that's not an answer. That's saying
just
we
say
it 'cause we
that,
say
mate,
it.
because you're making me feel dumb.
No, it's negative growth.
All right, you can go now.
Thanks, guys.
Thanks, Evan.